Good morning, John and Chris. I want to thank all the attendees that have joined the Land Pod here this morning. We're going to go through a few slides, talk about the market and a few trends that we're seeing. I'd also like to thank Land Pro. They sponsored our Land Pod here this morning, and it's our number one online data source that we use daily for land development services. So thank you very much to Land Pro. We appreciate it. And with that, I'd like to introduce John Starr. He's been my partner for over 12 years here at Colliers. And our newest guy, Chris Baird. We're happy to have him along, and he's our third amigo to the land team. So welcome, Chris, and let's get underway, John.
So I want to start out right away, share some slides with you folks. Like Jimmy said, we're the land group Colliers here in Boise. We have Chris Baird, Jimmy Romanis, and myself, or the land services team. Let's just get right into this and talk about Boise, the future lot development here in Boise. We've got the first graph we're sharing with you here. Of course, this is from our friends at Metro Study. We're very thankful with them for sharing data with us. The future lots in the entitlement process is a little bit of a confusing graph. The thing to pay attention to on that future lot entitlement process is just the sheer number of lots that are being pursued at different levels. Different projects have different timelines and so forth, and so they often carry over into later quarters. Something that was started the second, third, fourth quarter of 2018 might still be in process if they didn't have good luck at the city. So those 40,000 lots there are can be a little bit confusing, but it is a real number, and those are the numbers that are being looked at by the cities and municipalities and the counties. The future lots under development. This kind of leads into the next slide. You can see that the lots that are currently in the development process, we have a number of them that are heading into street paving. The streets are in, the survey stakes are done, but the majority of that is still just in the excavation and the equipment on site stage. Those are the beginning stages of development itself. The next screen we have here is probably the most interesting item. This is the vacant developed lot inventory. So this is what's on the ground that's ready to draw a permit. Vacant developed lot is a legal lot that can draw a permit in the county. The months of supply, I think, is what's most interesting. There's about an 11-month supply of finished lots, vacant developed lots in Ada County, and about a 10.9-month supply or 11-month supply of vacant developed lots in Canyon County. That shows, I think, a very controlled situation. While the number of actual vacant developed lots in Canyon County is only about 4,000, in Canyon County it's about 2,000. And that right there is an indicator that the builders won't have an opportunity to get an oversupply of houses on the ground simply because we don't have an oversupply of lots. With the long lead-in time for both the approval process and the construction process, you can see that everybody's probably pretty much working at capacity to get lots on the ground and ready to build houses on. And then finally, the annual new home starts, these are attached and detached homes, and it starts and closings. And you can see that in annual closing and the annual starts are only about 5% apart. So that means that at any given time, we've got 5% of the houses that aren't actually closed, and that's a pretty tight supply of homes. If you look at the bottom of the chart on the right, you see that the single family detached homes are only 10% over. There's only a 10% increase from the second quarter of 19 to the second quarter of 20. for the single family detached homes. So again, very reasonable numbers, very controlled numbers. The quarter-over-quarter closings are kind of less interesting. The annual starts match the annual closings. We're 10% additional starts this year and 10% additional closings in single family detached.
And John, this is Jimmy here. There's a question that was asked earlier today. What cities and counties are more likely to allow for a comp plan change to allow for higher density? Now, this doesn't correlate exactly to the table that you have up on the screen, but could you speak to your assessment of the different cities and counties and which ones you think are more amenable to comp plan change today?
Right. So I think, again, the demand that the idea that we need to change comp plan is a question about where you want to be with the demand versus what's available to develop. And what we're seeing right now is that the demand is for a higher density product in order to hit better price points, a lot of infill product that people want to do. And what that has, all of the cities and municipalities, all the municipalities and counties have recently updated their comp plans like in the last 5 years. And so the answer really is that none of the cities right now are interested in changing their comp plans.
Correct.
You're going to have a hard time changing comp plans. We're seeing here in the city of Boise, some developers having a hard time changing their zoning, let alone the comp plans, Jimmy.
Yeah, no, those philosophies have changed quite a bit. We just, if we're working in the city of Meridian, Eagle, or Boise, it's really tough to get something rezoned to a higher density product type. And Chris, I'm not sure if you're seeing this trend, but all of us, majority of us here in the land business, we continue to get the multifamily inquiries if it's from a developer looking for dirt or existing product type. And then a trend that's been gaining steam is your single family detached for rent product type, that you're seeing other developers come to the marketplace asking if we could get something rezoned to 4 to 6 units per acre. What's your assessment of the current market and the density we're discussing today? Are you seeing that out there, Chris?
Yeah, I am. It's interesting that for me, it seems to be a real strong drive towards multifamily, as you mentioned, residential with kind of less density really being pushed outside the municipalities, just because of the challenges with the cities and even the counties to an extent, trying to catch up with what's happening with the growth in the valley. So, stuff that you didn't think would be maybe land that would be something looking for residential or multifamily is now a pretty good target for some developers because they have the ability to do it relatively quickly and not sit on that land. Because I've worked several deals in the city here. I'm still up for several years just trying to get them, changed zoning wise and get things approved. And it's almost untenable at times. So
it's a good assessment. And John, what would we're not only is our municipalities focused on workforce housing and affordable product, that's a big deal for any new projects coming into the pipeline for city municipalities to look at. You think that's going to play a bigger role moving forward here in the next few quarters?
There are individual developers, builders who are looking at product that will address affordability, whether it's using modular construction or downsizing units. I think one of the multifamily projects that we're involved with over here on Front Street has dedicated a certain number of units to affordability. The project that we're working on, Lucy Avenue, I think they were going to dedicate 10 of the units of their multifamily project to affordability. And the interesting part to me, having come up through the low-income housing tax credit program and all that, is that these things are being done not with any kind of government subsidy or support. They're basically being done because the developer sees the need and they're reaching out, in order to enhance the improvement of the approval of their projects by providing that. I'm not even asked them for it.
Yeah, good point. Yeah, John, you have a checklist that you prepared this morning, a little sample sheet that you want to share with the attendees here today.
Yeah, can you see that on your screen, Jimmy?
I can, yes.
Okay, just a real quick question. I wanted to get input from the attendees on this. Where do you think we are in the beginning, middle, or end of the commercial cycle? Where do you think we are in the beginning, middle, or the residential cycle? And you guys can, weigh in on that as we go along. We'll get to the results of the poll as people weigh in on it. Let's recap, Jimmy. I think we've had a lot of people who joined us. Yeah, if you're just now joining us, let's go through a quick recap on the slides here. This, of course, is the most interesting one. The first, just real quickly, in the Boise market, the future pipeline of supply, the lot supply, looks like the stuff that's in the entitlement process, totaling about 40,000 units. That's residential of all kinds, attached and detached residential, about 40,000. In the future lot development, the projects that are actually under construction, clearly 78, almost 80% of those are in the construction phase with equipment on site and excavation occurring. Of course, every project has its own timeline. In fact, I think if there's probably some Harris Ranch lots included in there that haven't gotten to their final plot yet. And then over here, we got our vacant developed lot inventory. Very manageable, very realistic vacant lot inventory of about 12 months, given the time frames that it takes to construct lots and so forth. 12-month inventory is a very manageable inventory. Of course, we all know what's going on with the prices on that inventory. I see we've got some people in the audience here, including Mr. Turnbull and some other guys that, they have their builder teams, and those lots aren't necessarily available to the merchant builder market. And there just aren't a lot of lots available anywhere if you ask any builder. Annual new home starts versus closings. There's only about a 5% gap between the two. And that's, again, a very manageable kind of thing. Just a 10% increase in annual single family starts.
I'd like to talk about a few trends that we've experienced firsthand since the onset of COVID, primarily with our legacy project out there in Eagle. When COVID hit back in mid-March, we were skeptical of how we were going to proceed for the next few quarters. 30 days following, I would say probably early May, that changed completely. The amount of activity, calls, and demand from outside home buyers and builders just changed drastically to the point where you and I were fielding 20 to 30 calls per day from out-of-state home buyers looking to move to Eagle, Idaho. After about 2 months of fielding so many calls, I said, just out of curiosity, what is the urgency moving to Eagle, Idaho during COVID-19? And over many occasions, these home buyers said it was the perfect storm in our decision-making process. It was politics, climate change, trying to get out of the coastal markets to a more financially sound environment. Everything came together at the perfect time for them to make this critical decision to sell their home and move to Idaho. Now, this is not we're just not experiencing this in Boise and in the Treasure Valley, but we're also experiencing it in Sun Valley, in Coeur d'Alene, right? With the 2 listings that we just took in both those markets, that's what we've learned, that the activity that we're experiencing in the Treasure Valley is also being experienced in those markets as well. So what do you What do you see, John? I mean, that's what I've experienced. And at this point, we're trying to develop as many phases as possible to keep up with the demand. And
Right.
how do you forecast that continuing into the first few quarters of next year?
Right, and I think this might be something Chris could speak to as well, because a lot of your clients, Chris, I take it, are the kind of folks who, are escaping to Sun Valley. They're escaping to other destination locations where they're trying to get out of wherever they are, whether it's Orange County or Seattle or what have you. What have you seen, Chris?
I've seen exactly what you and Jimmy have seen. Interestingly, personally, they want to move out of here, and I think eventually they'd like to invest. But there's a little hesitation right now with the investment. Part of it has to deal with some of the issues we addressed earlier. With, are they going to be able to develop? Are they going to be able to do some of these things in a reasonable amount of time? Are they going to have to hold that investment land for a period of time? Or they want to see what's going to happen with politics, with COVID, with other things. So I kind of see more of I want to get there personally myself, move my home there, move my business there if I can, and then let's see what's going to happen as far as development and investments and stuff after that's completed.
I agree, and I think that while initially a lot of the people in our business see the opportunities that are arriving. I think one of those guys you talked to in May, Jimmy, said, I found out I can work from anywhere, and Idaho is where I want to work from. And so the pause, I think, between these companies and so forth coming here and wanting to be in this market and participate in the growth that we're seeing is going to be fairly lengthy. We've been working with a builder out of Orange County since last spring, and they look around the market and they see everything that's going on, and they say, well, we just want to buy some lots, and get our business started here. And we've had that conversation dozens of times with dozens of builders since then, and the answer is always the same. The answer is there are no lots for sale. We can probably get you on a good piece of ground to develop. We might have to go out to Caldwell to find an available sewer pipe and other infrastructure. But it's been tough to really answer those questions.
A question just came in. What are the appreciation trends for farmland in Southwest Idaho?
You dealt any farm ground this year, Chris?
Our sample size is very limited. We've sold one piece of farm ground this year, so it's hard to tell, but what would you guys say?
We've sold one piece of farm ground the last 24 months. And the answer is that there are not very many farms for sale. I mean, even if you go talk to John Knipe, I think you'd find out that there just aren't a lot of different farms that are on the market. Prices seem to be steady, and they seem to be high. Certainly, the prices that we've seen on farm ground are not supported by the cash rents that are available to the landowner in most cases. I mean, we underwrote one here last month over in Adrian, Oregon, and I think that the cap rate ended up being about 1.2. Great piece of ground on the Snake River, 95 acres of irrigable farm ground. And, the rents are what they are. They're only about $250 an acre on an annual basis. And, it's just very difficult to make it work from an investment standpoint. And with the farmers, the uncertainty that the farmers see, gosh, I wouldn't want to have been an onion grower when all the restaurants quit taking onions last spring. Restaurants and conventioneers and all that kind of stuff. So it's the prices are all over the board for produce. Milk has been having its issues. It's just a tough time to be a farmer, and I think it's a tough time to buy farm ground. One thing we do see is we've seen institutional folks, I think Hancock, no, it wasn't Hancock, it was Harvard, just moved their natural resources investment group outside of the organization to, they basically sold it to another organization. So they're no longer, Harvard is no longer managing all those assets that they own in blueberries and apples and everything else and to do with farming.
And John, what about, you mentioned something earlier today about generational trends where, now's the time where the younger generation has elected to move on and sell the family farm or the family asset.
Oh yeah, that's been a very interesting development in our business. What we hear is that the largest transition of wealth in the history is coming up as these people time out on their active participation, whether it's farming or development or what have you. The two properties that we've listed recently in Coeur d'Alene and Haley are exactly that. They are assets that have gone to the next generation, and the next generation isn't interested in developing themselves, and we're going to sell those assets for them. The farm we sold in Marsing was exactly the same. They were no longer really interested in participating in it, actively. I got the poll results here. Real estate cycles. Looks like about half of you guys answered the poll. 67% of you said that we are at the end of the commercial cycle, and only 17% said we're at the beginning of the commercial cycle, which is interesting. I think that we're going to see a cycle. On the commercial side, we see more and more demand on the industrial side every day. I think office has a big transition coming, and retail has a very big transition coming. On the residential cycle, 58% of the folks said that we are in the middle of the residential cycle. And I think that's interesting as well. We haven't seen any downward pressure so far on pricing. We've seen a lot of downward sentiment, but no real downward pressure. Chris, when people talk to you about land prices, what are they saying? Are they saying that sounds high, or when they look at a finished lot or something to develop on, are they thinking that's a high price or a low price, or where are they thinking?
Well, a lot of that depends on where they're coming from. If you're staying within the valley here, I think they've seen what's happened, and whether it be they're upgrading because their family's getting larger or something, then they're probably thinking that they're getting priced out as a local or as a resident of Idaho. But people that come in from out of state, and I can vouch when I moved back to Idaho from California, the land, the home values, everything were just incredibly cheap compared to those markets. So it really is kind of a factor of where you come from, really. And talking about the trends in the cycle and where we are, it might actually be earlier than what the polls say, and I would say that because COVID's changing the way people work, where they work from, where they can live, and so I think more and more people are going to be interested in a place like this, where if they're going to work from home, they're going to have an affordable place they can live, and a nice piece of land, and they're not going to be living on a property that's measured in square feet. It's going to be measured in acreage, which is a different sort of thing. And one other comment I'd make, going back to the previous discussion with you and Jimmy, would be that the farmland value really has, to me, the value is significant based on whether it's entitled and how easy it is going to be to get entitlements there, or if it has some other value, whether that be organic farms, wineries, hunting, that sort of thing. If it's just farmland, I think I really haven't seen a huge increase unless it just happens to be in the right place, near Highway 16 extension or somewhere where, maybe a Costco just went in kind of thing. But that'd be my take on that.
Yeah, we're trying to do, if anybody's interested in buying some ground for duck hunting, pheasant hunting, come to me. But the place we were looking at in Adrian was actually 135 acres. 40 acres of it was duck ponds. Sits right on the Snake River, beautiful spot. So I think the recap is that there's lots of pressure from both internally and externally for land for development of all kinds, especially industrial, multifamily, and single-family detached. I think that we're seeing a fairly slow market in the agricultural sector. And I think that the thing that we always have to be careful of as locals is to make sure that we don't always look at this in a myopic way, just from, how much did land sell for 2 years ago? I'm certain that you home builders that are listening in have already figured that out because you've raised the prices on your homes to match the expectations of the buyers, price and quality. And I think that we're really, we're set up to, move straight into the future here and get some stuff done when it comes to more development ground. Let's do another real quick recap on the numbers since we got a minute here. I think this is the most interesting bit of data that Metro Studies shared with us, and I think that this really points to a trend that we're going to continue to see a fairly tight market, and it's going to continue to have the upward pressure on pricing that we've seen in the past. Since second quarter, what is that? Fourth quarter 2011 when things turned around. Third quarter 2011. We'd sure be interested in hearing from any of you participants about your thoughts on the market, where you think we're going. We're getting into that time of the year where, we're taking stock of where we've been and where we're going for the coming year. I know that Jimmy and I are excited about listing more development ground for sale. That's basically what all I do during hunting season is go talk to farmers. And I'll be dragging Chris along with me because I hear he has a dog.
Yeah, thank you, everybody. All attendees, Land Pro, Metro Study, appreciate it. Keep up the good work out there. Thanks, Chris. Thanks, John.
All right.
Thanks, Jimmy. Thanks, John. Excellent work.